Hello, it's me Adnan Rahman, the market analyst for Errante, and in this video I'll be explaining you everything, each and every fundamental that you need to know regarding the UK CPI data schedule for tomorrow. Okay, I'll start with three things of what do we know, and there are three components that I need to shed some light on. The first one is PMI, the second one is Bank of England policy report or policy forecast, and the third one is the CZ Economic Surprise Index. I'll start with the PMI. What did PMI show us? It showed us that in the latest data, the price pressures are increasingly high, okay, or they are high. And service inflation is high as well. So in a nutshell, it means that Bank of England or GBP or UK is facing inflationary pressures, okay? This is what you need to keep in your mind, that there are inflationary pressures around. The second thing is a Bank of England policy forecast. Let me show you the policy forecast. So this is the forecast of Bank of England. You can see a downward trajectory till the December the 18th, the whole year for 2025. It's pointing towards the downside on a nosedive situation. Okay, so keep this in mind. And while making this video in the morning, what I saw was that City Bank has also issued a forecast that they look Bank of England, to be having a series of rate cut in this whole year. So, these two things are interlinking with each other. Okay, and rate cut, obviously, in a normal tone, in a normal scenario, rate cut means that this will kind of weigh on that currency. Okay, and then when it comes to Bank of England policy forecast, what do we know besides that? There is 65% chances of a rate cut in February, and two rate cuts are already priced in by the financial markets. So keep this in mind. So until now, what do we know? We know that the inflation is high and there are rate cuts on the play. And the third one is CZ index. And what did it say us? It already showed us that in the year 2024, in the second half of the year 2024, the index for the GBP was on the negative side. It was like on below negative 30 level. It stayed over there, and now it also gave us the forecast that the inflationary pressures persist. Okay, so let me show you the CZ index. It's something like this one, and you can see Bank of England is on the negative 34 side over here. Okay, see, this is the whole index of each and every major currency and major central bank, and this is the CZ index. Now, in a nutshell, what do we know? In a nutshell, we come to know that there is inflationary pressure around and the growth is stalling and rate cuts are in place. So when you have inflationary pressure around and the growth is stalling, this means, or this is a perfect blended formula for stagflation. And when stagflation hits an economy, you can expect that economy to go a little bit of downwards. Okay, so keep this in mind. Now let's talk about the news outcome, or what outcomes can we have. We should be prepared for each and every scenario. So let's discuss it. I need to focus on this black one. Okay. Now let's suppose if we have high CPI or high inflation than expected, what happens in that case? In that case, obviously the high inflation will weigh on the pound and it will cause that stagflation fears to rise. This is what I've told earlier right now. Okay. On the other hand, if we have lower than expected CPI, what happens in that case? When the CPI is lower, then this will amplify, the need of a rate cut, and Bank of England will go for rate cuts. And usually what happens when you have rate cuts, it means that it will weigh on the economy, okay, on that particular currency. So in both the scenarios, if you have a higher than expected forecast, or a higher than expected print, or a lower than expected print, in both the scenarios, it is going to weigh on the economy. Okay, so it doesn't means that as soon as the print is out and then GBP will go falling down. That's not the case. This is an analysis only. It's not a trading signal. Please keep in your mind. Okay, but what happens in this type of scenarios, that people who are totally not into this fundamental analysis or the automatic algorithm systems, they will show a knee-jerk type of stuff. Okay, they will definitely go into a buying or a selling knee-jerk scenario. Okay, so keep this in your mind. Now on the other hand, now let's look at the trade plan. hand, what happens, there are two scenarios. Like one, we have the lower CPI and the lower GDP. In that case, obviously, okay, rate cut expectations will increase. Okay, again, it will weigh on the pound. On the other hand, if we have a higher CPI and a higher GDP, okay, earlier we saw the lower CPI and the lower GDP. Now we'll see a higher CPI will give us obviously the stagflation fears. That is what we have discussed here. On the other hand, a higher GDP will give us stagflation fears, decrease in stagflation fears. Okay, so this is the main thing you need to focus, because on Thursday there is GDP print upcoming. So keep this in mind, keep this image in your mind, use it as your what can I say, a cheat type of stuff, or a note. Keep this with yourself. So while trading into this GBP stuff, you can understand what the market is going on. Okay, and now comes the pair. What pair can be used? So to synchronize yourself with this fundamental and technical analysis, if you remember on Friday we had this tremendous data from the NFP news and the Canadian job side. Okay, so it gave a very strength in these two currencies, in the US and in the Canadian dollar. So while coupling up the strength in these two currencies with the given, if forecasted, weakness in the pound, you can gain some tradable opportunities, obviously. Okay, now let me take you towards the MT5 chart and let me show you what's happening. Okay, this is the MT5 chart, and now I'll take you and let me get myself off the way. Okay, so this is something I was looking into. This is a resistance area over here that has been tested over here, and then this area over here, there was a breakout of this zone over here with this gap. And when you have this gap, it means that there is high level of imbalance over here, and market tries to fill in this imbalance. And obviously if we have an upward movement, you can expect a resistance area over here. But right now, as there was a breakout, and you can see that this market was already below this 250 moving average. So this was a very good test, test the moving average area type of stuff. So let me get this moving averages out of the way. Okay, and if I'll go towards this VSA, we have plenty of, let me delete this as well. See, we had this no demand over here, a no demand over here. We had this no supply over here. But as we were in a downward movement of the moving average, this is something we always miss. Okay, and then continuation with no demand here, same thing over here, and now we have this dead cat bounce of scenario where your support becomes resistance. Okay, a dead cat scenario over here. So keep this in your mind, and this was your support area over here. Now if we have this news, please make sure that you are well equipped and you know very well how to trade it. So on the other hand, this is some sort of a single print type of area, and obviously if the market needs to go up, it needs to break this level and then move towards the upside and cover up this zone over here. So keep this in mind, and the same chart for the GBP CAD is identical. You can just go and see it for there. Okay, besides this, do we have any other thing? We had this order block over here. The main the starter of this bearish movement is this order block over here. Okay, this one, see, this is the H4 order block. Okay, and if I'll go to the H8 one, we will get the H8 order block over here. So this was proper sync. It was in proper sync. So I hope I have explained everything in detail. And if you need any further improvements in your trading strategies or what, do join me and I'll show you how deep the rabbit hole goes. Okay, take care of yourself. Thank you. Have a good day.